In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Facebook under fire again. Could the social network itself be the one now threatening democracy? We'll discuss a bombshell New York Times report. Plus, Uber moves one step closer to releasing more data on sexual assaults. Our extended sit-down with Uber Chief Legal Officer Tony West 1 year into the job. And Apple rebounding after hitting its longest losing streak in more than 6 months. Why investors are questioning their faith in the iPhone going into the crucial holiday season. First to our top story, it is no secret that Facebook has been struggling to keep up with fallout from its platform being used for election meddling, spreading fake news, and more. Now, a blockbuster New York Times report alleges just how far the company has gone to protect itself under major scrutiny, specifically how CEO Mark Zuckerberg and COO Sheryl Sandberg went on the offensive to fight back at Facebook detractors. This includes direct lobbying of lawmakers and going right after their opposition, even hiring a Republican opposition firm to paint its accusers as anti-Semitic, specifically Holocaust survivor and billionaire George Soros, a move that Soros' philanthropy chief is calling reprehensible. He wrote in an open letter to Sandberg, "The notion that your company, at your direction, actively engaged in the same behavior to try to discredit people exercising their First Amendment rights to protest Facebook's role in disseminating vile propaganda is frankly astonishing to me. It is disappointing to see how you have failed to monitor hate and misinformation on the platform. To now learn that you're active in promoting these distortions is beyond the pale." Zuckerberg, for his part, defended the company against the Times reporting on a call with reporters Thursday. Take a listen.
To suggest that we weren't interested in knowing the truth, or that we wanted to hide what we knew, or that we tried to prevent investigations is simply untrue.
He added that Facebook will form a new independent body to review content decisions. Here to discuss, who else but Bloomberg's Sarah Friar, who covers Facebook, and Techonomy founder, and our Bloomberg contributor, David Kirkpatrick. So both of you were listening in on this call. Zuckerberg really seemed to be on the back foot here. Reporters were firing questions at him. Who's getting fired? Who's getting fired as a result of this? Sarah, walk us through what Zuckerberg had to say.
Well, what I thought was very interesting about this call in relation to calls past is he was willing to say that there could be some people who could get fired because of this. In previous calls, he said that everything ends with him. He takes full responsibility. And in this case, he said, look, we did some things wrong. And of course, we're always making personnel decisions. That's like as far as we've ever gone in the directions of him saying he has to fire someone. And one of the first things, one of the first pieces of fallout from this is that the firm that made that link with Soros for reporters, although it was true that there was some financial relationship there, that firm has been cut from Facebook ties. They are no longer working with them. Zuckerberg said on the call that he did not know about the Definers relationship and he was not informed about the way that the company was using them.
This firm, the Definers, as it is called, it's interesting that he admitted on the call that he didn't know anything about it. He learned about it in the New York Times piece. I want you to take a listen to what he had to say about personnel, because I do think it's worth hearing exactly what he had to say. Take a listen.
I just generally don't talk about that, specific cases of that in public. It's not that, we run the company and people make mistakes and there's no consequences. It's that, as part of the normal process of running the company, we're evaluating people's performance and making changes either in role or in some cases finding different people to do different roles when we need to. So that's an ongoing process. That's part of running the company, and we'll certainly keep doing that.
This after being pushed by reporters. David, you've read the article, you listened to the call. What do you think about all of these revelations is the most damning?
Well, it was amazing the defensiveness with which the call was conducted, and I think it's appropriate. I think Facebook is coming to a sense of responsibility so egregiously late on many of these issues of misuse and abuse and political manipulation that they're forced into an extremely uncomfortable position. What the article most amazingly laid out, I think it's not shocking to those of us who follow the company closely, but it was laid out in chapter and verse. It was right there in the title, you know, delay, deflect, and distract. That has been the company's policy. But, you know, the other thing in that headline was leaning out. So, in effect, this article was very much about Sheryl Sandberg and her role being a progenitor of a distracting, delaying, and deflecting tactic. It's very interesting to me that she was not on the call today.
You know, it's also interesting, Sarah, to see some of the internal machinations of how Facebook works. You know, Mark and Sheryl have surrounded themselves with loyalists. And obviously, for this story to get written, people were talking. You know, we heard about an exchange with board member Erskine Bowles, who was grilling Mark and Sheryl about why they didn't respond to this sooner. I mean, that kind of detail is very unusual. The board has come out with a statement saying that they did push Mark and Sheryl to move faster on this Russian interference issue, but to say that they were not interested in figuring it out or getting to the bottom of it is grossly unfair.
I mean, I think David is exactly right. This story points directly at the part of Facebook that is run by Sheryl and the strategy she has, which, you know, she has been praised for in the past, her ability to have sort of a more political savvy, to have contacts in Washington, to be able to go to them personally. The story talked about her writing thank you notes, personal thank you notes after meeting with people to try to change their opinion about Facebook. But you know, obviously those things have a very different tone to them when you think about the broader narrative that Facebook is trying to propagate, which is that they're on top of this, they care about it, they're willing to change, and then behind the scenes to have one of their top executives talking to members of Washington and saying, you know, you really shouldn't be as hard on us. This isn't really something that you should look at. You know, that kind of thing is very concerning because you have a behind the scenes that's different from the Facebook that people are trying to portray in the public.
Now, David, are some of these tactics, you know, some of them are reprehensible, but others seem to be tactics that are used by many different companies. I mean, all tech companies are lobbying on Capitol Hill. You know, is it fair to criticize Facebook for them when, you know, we can presume that other companies are doing this as well?
I don't think there's anything wrong with a company managing its image. That's what PR is all about. But I think what's very unseemly here, and which the article, I think, laid out in some devastating detail, is that even as the company has essentially been inactive in addressing some of the disastrously harmful social effects it has been extremely active in managing its image to try to undermine the impact of people thinking that it was bad at managing the social harms. And to me, the former is much more important, and I think the article maybe didn't hit as hard on that as I would have, but that's really what they need to be focusing on, not image, but substance. They did announce some things today that I thought were extremely positive. This board of oversight, which will be composed in large part of outside people, that's a very positive move. I would say in general that Zuckerberg's tone on this call was the best tone I have ever heard in terms of taking seriously this set of problems they face. But why they didn't have that attitude years ago is the real question that is not yet answered and maybe can't be answered, but has to be asked.
Let's take a listen to what he had to say about this independent content review. Listen up.
I've come to believe that we shouldn't be making so many important decisions about free expression and safety on our own. We've been talking to people about this for some time now, and I've spoken to many experts myself starting in the summer. And today we're announcing that we're creating a new independent body that people will be able to appeal to, that will have the authority to determine whether content should come up or stay down.
David, do you think that there will be some high-profile executives who leave as a result of this? I'm talking going all the way to the top.
Well, I will say, and I talk to a lot of Facebook experts, critics, thinkers, analysts, There are quite a few, I'd say a growing number of people who seriously question Sheryl Sandberg's role at the company. I don't think she's likely to be forced out because I think Wall Street would freak out knowing that she's the architect of the business that has been the goose that laid the golden egg, so to speak. This is an incredibly profitable business and she architected that. However, I think the evidence is increasingly accumulating that she has not imposed sufficient governance into the system that she designed. So, that's where the question is being asked.
Sarah, we know that this company is being scrutinized in Washington, that lawmakers are looking closely. Has anybody suggested that this company, which also owns Instagram and WhatsApp and has Facebook Messenger, should be broken up?
Well, what's really interesting about what we've seen happen in just the last year is Facebook has taken those external properties and brought them in and created what it's calling the family of apps, which includes Messenger and WhatsApp and Instagram. And the data is being shared amongst them. There are a lot of resources that are being shared amongst them, and the leadership changes that happened this year, with or without Facebook's wanting them to happen. We had the founders of Instagram leave, we had the founders of WhatsApp leave, and that opened up an opportunity for Facebook to really connect with these other apps more. So I think they're making it harder to be broken up if somebody was going to come in and do that. That said, we did hear David Cicilline yesterday. He's the leading Democrat on the antitrust committee of the House. He said that starting next year, they're going to have to take a very close look at Facebook's practices, especially in light of what we heard in this New York Times story yesterday, that this is going to open up an opportunity for Democrats to be hard on Facebook.
All right, Sarah Fryer, who covers Facebook for us. I know you're going to continue to follow this story, as well as David Kirkpatrick. Thank you, as always, David, for weighing in. All right, coming up, Uber is expected to launch one of the biggest tech IPOs in recent history early next year. But will the company's continuing losses stand in the way? We will discuss. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Uber has been spending more to fuel global growth, but it's the company's losses that seem to be growing. On Wednesday, the ride-hailing company reported it lost more than $1 billion in the third quarter. That is a 20% increase from the second quarter. And while the company looks to diversify with scooters and bikes, its growth appears to be slowing as well. Uber reported revenue growth of 38% in the third quarter, almost half the rate it was 6 months earlier. Meantime, the company is preparing for what could be one of the biggest tech IPOs in 2019. Here to discuss, Bloomberg Tech's Eric Newcomer. So why is it losing $1 billion in this quarter, just months before a potential IPO?
Uber would say scooters, food delivery, investments in autonomous vehicles. But I think part of the question is we don't actually know. Uber doesn't break out ride-sharing specific numbers. And I think part of the uncertainty around Uber's financials is the fact that there isn't a lot of visibility how much the losses are a war with Lyft in the United States versus actual investments in future growth.
What is the time frame now for an IPO?
Dara has sort of stopped talking about it, the CEO. For a while he was saying targeting second half of 2019. We're hearing internally he's telling people the first half. So it seems like next year, judging market conditions and hopefully for them in the first half of the year.
So is the company going to be ready in a matter of months?
Their chief financial officer sort of deflected several months ago when he started having to sort of figure out what's going on with the company. So I think they haven't said, okay, we have all the pieces together, but it's a pretty professionally run company. I think they can get it together.
Give us the bull and bear case here, given that bankers are shopping, $120 billion valuation.
Right. The bull case is that the losses are mostly about growth, that when we see the ride-sharing business, it'll look pretty good, that they can make a profit when there's less competition or when they make certain tactical decisions, and that Eats is becoming one of the biggest, if not the biggest, food delivery companies in the world, and that there are just a lot of pieces that create this huge, promising sort of future Amazon scale business. That's the bull case. The bear case is that they're hiding bad ride-sharing numbers with bad food delivery, with sort of losing money food delivery business, and that you can make a lot of revenue by giving someone something for less money than it costs, but at the end of the day, you need to be able to make a profit on the service to have a profitable business, and we haven't really seen evidence yet that Uber can do that.
How big is Uber Eats relative to the rest of Uber's business? Do we know?
They've said that it's like 17% of their total gross bookings, which isn't a perfect number because
it counts the food.
Right, exactly. So it's definitely the number to pick if you want to make the point that you think Uber Eats is really big. We don't know on a revenue basis the size of Uber Eats, but clearly it's a priority for the company.
And the other businesses are really completely nascent. Scooters, bikes, self-driving, correct?
Yeah, I mean, self-driving, they're surely spending a ton of money on R&D, but it's not, a revenue generator. And then scooters and bikes are extremely early. The company just announced a rewards program. They hadn't even included scooters and bikes in it yet because it's so new they didn't have time.
Uber and Lyft announced rewards programs this week. Uber seems to be a little bit more fleshed out, but it sort of reiterates this idea that ride sharing is a commodity. It's just like a hotel or an airline. It's a page of the hotel and airline handbook. How much is Lyft eating away at Uber market share, if it is?
I think Lyft got somewhere 30% market share. It's not just the gains in market share that are troubling. It's the fact that Uber has to keep spending, discounting, underpricing what it would like to charge to keep riders and drivers on its service. And I think also the fact that the economy is booming has made it hard for both companies to recruit drivers. So the competition, makes it a low margin or no margin business in the US. Dara said publicly at the Wall Street Journal conference that the company is not contribution margin positive, already a generous sort of made up financial term in the United States. So that's problematic. So the competition with Lyft is really challenging for Uber.
All right, Eric Newcomer, who covers Uber for us, keeps the company on its toes. Thank you. Coming up, Uber's new 53-page report on sexual harassment, misconduct, and assault. We're going to speak with Uber's chief legal officer, Tony West. We'll also ask him some of these other questions as well. Plus, Walmart is proving to be a force to be reckoned with in the battle for e-commerce. How it plans to take on Amazon globally. That's next. And Bloomberg Tech live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Amazon, beware. Walmart is ready for battle. The world's largest retailer posted third-quarter earnings Thursday, and the message is clear. It is coming after Amazon hard. The company saw strong sales, though its rosy forecast ahead still wasn't enough for some investors, and the stock fell. Still, Walmart is expected to overtake Apple as the third-largest e-commerce retailer in 2018, proving itself a fierce competitor to behemoth Amazon. I sat down with the CTO, Jeremy King, at the Techonomy Conference in Half Moon Bay, California, Monday before earnings to talk about the competition.
Their strategy and ours is different. I mean, we're really trying to focus on hundreds of thousands of items that you can pick up in the store. So buying online, picking up in store, making that shopping experience easy. Also, online grocery is a place where we're excelling.
Right, and you are, to be fair, you're beating Amazon in that category.
Yes, and so how do I focus our efforts to make that shopping experience just like you would expect at a Walmart store? How do I make it so simple when I'm coming in to pick up my turkey and my cranberry sauce to make sure that you have time to get a good toy or a sporting good at the same time? And so really focusing our efforts around the omni-channel experience, and fresh and frozen delivery and pickup is a big part of our strategy.
With Amazon buying Whole Foods, how will you stay ahead in grocery?
Well, we have a significant amount of locations more than we do. We have 2,100 online grocery pickup locations, so the biggest in the U.S. at this point. And we're continuing to ramp that. I think we're opening like 30 or 40 stores a week that allow pickup. And then we've also done delivery to stores. And you can imagine the technology to integrate all that and rolling that out to all the U.S. essentially as fast as we have is one of the fun parts of a technology job, is scaling as fast fast as the business can. So
now,
it's really about focus there.
Across all the platforms, what are you doing specifically to leverage customer data to make the shopping experience faster and easier online and offline?
Yeah. Walmart has a lot of great data, and really what we're really focused on is making a really customer-centric interface. So, for example, I mentioned easy returns, but things like easy reorder. Oftentimes when people are buying groceries from us, they're buying 50 or 100 items, and if it only takes 5 or 10 seconds to add an item to the shop, you're talking about a 20 to 30-minute shopping experience. So how do I make that easy? You know, you're buying the same cereal and the same baby food that you did last week, so how do I make that experience of adding 100 items to the basket extremely easy, and using customer data and trends and things that you did last year at this time of year can really help that experience.
Now, Walmart has of course bought Flipkart. There's a new battleground in India. You know, over the course of your career, you've worked in India and China. How does the India battleground play out with Amazon there, with the local competitors?
Well, it's early. The thing I'll say about the one thing I say about this is that our leadership team there, Judith McKenna is our CEO of the International. She's got an incredible team there. We've done partnerships not only with JD and work with Rakuten, but also, as you know, the Flipkart deal.
Yeah.
So it's early, and typically when Walmart does an acquisition, we try and let that bloom for a little bit before we help too much. We don't want to hug technology teams to death as we go out there. So we're really spending time with them to talk about their data strategy, and they're doing some great work on the mobile side. But the international stage will be a very interesting one.
So what do you think the potential is in India for Walmart?
Well, I mean, obviously we have stores there, so Judith is working on that strategy, and how do I use the Flipkart assets and the Walmart assets together, the similar experience that we have in the U.S.
You report to both the CEO of Walmart e-commerce and the CEO of Walmart U.S. How does that work?
Yeah, it makes the job really interesting. I mean, it's super fun because you have somebody like Greg Ferran, who I'll say is probably going to go down in history as the best sort of operator of a retail company in the world. I mean, the discipline they put in. That's a big
compliment.
He's amazing, and that team is just so incredible. But think about it; they're running a 1 million-person company effectively. We have 1.1 million associates, and just their operational excellence and efficiency, and their focus on not only things like price and customer experience, and just the ability to execute that is fascinating. And then you've got Mark on the other side, who's like a true innovator, and he's got an idea every minute, and we're experimenting all over the place. So you've got the combination of the two. It makes my job great.
That was Walmart CTO Jeremy King at the Techonomy Conference in Half Moon Bay, California. Now, after that interview was taped, we did learn that the CEO of Flipkart resigned amidst allegations of misconduct. Coming up, Uber is one step closer to releasing data on any serious incident that happens on its platform, including sexual assault. We will speak exclusively with Uber's Chief Legal Officer, Tony West, next. Plus, Apple shares hit the longest losing streak in more than 6 months on more bad news. Will the holidays bring more losses or a rebound? We'll discuss. This is Bloomberg. In San Francisco, and this is Bloomberg Technology. 53 pages. That is the length of a new report that outlines how Uber will label cases of sexual harassment, misconduct, and assault. The report, written with the help of the National Sexual Violence Resource Center and the Urban Institute, will be key to Uber's commitment to release data on sexual assault, fatal car accidents, and other serious incidents that happen on its platform. This, as many tech companies like Google, Facebook, Airbnb, and more are changing their policies on handling sexual harassment, some more so than others. Here to tell us more about this, Uber's Chief Legal Officer, Tony West. Tony, thank you so much for being here in the studio.
Thank you, Emily. It's great to be with you.
So you're a year into the job, and we've talked about...
A year next week.
We've talked about how you knew this was going to be a hard job.
Yes.
There were a lot of skeletons you knew you would find in the closet. and you've likened it to climbing Everest. So how far are you? Are you well on your way, or are you still at base
Well,
camp?
the beauty, the thing about climbing Everest, it's the journey. It's not the destination all the time, and so we're well on our way to getting to the top. But I have to say, the last year has been incredible for me, just to be able to be at a company that has got this organizing principle of do the right thing, which really informs everything we do, and then being able to make progress on some and take leadership positions on some of the issues like sexual assault prevention that we are beginning to do with this taxonomy that you just referenced.
You've not just pushed Uber to do the right thing, but to do the right thing, period. And this handling of sexual assault cases does go beyond what other companies do. How optimistic are you, though, that other companies will follow?
Well, I'm actually quite optimistic. We are having conversations with other companies about adopting this taxonomy, because what this is, it's never been done before, is it categorizes exactly what kinds of behaviors, or I should say misbehaviors, that make up sexual assault or sexual harassment or sexual misconduct. Not always illegal conduct, but conduct that you don't want happening in a customer service environment. And what's great about it, even though it was developed with the Uber platform in mind, it can be used by any company that pulls two or more people together in the real world in a customer service environment.
Now, the question is, I wonder, how do you balance your instincts as a former DOJ attorney when there are trends in the legal profession to enable companies rather than resist them? I mean, sexual assault, for example, it's believed that the incidents that are actually reported are highly underestimated, that there are far more than are actually reported. So is this really good for Uber's business?
Well, it's very good for Uber's business, but much more important than that, it is the right thing to do. It is good for all of us. We've always believed that if you enhance the safety of the platform for women, you'll make it safer for everyone. And what this effort does is it takes us closer to that goal of having a safer platform. I understand why some people might be reluctant. I mean, look, obviously the chief legal officer is usually the guy in the room who's saying, take less risk, not more. But the reason this makes sense for us is we have a paramount duty to our shareholders, no question, but we also have a duty to our stakeholders. Those are the millions of driver partners, riders who use the platform every day. We have to do right by them, and this is a step toward making the platform sustainable and safer in the long term.
Now, months before Google ended forced arbitration in sexual harassment cases, Uber did it. Uber's also done it for riders and drivers. Airbnb is taking that a step further and eliminating it for discrimination cases. Microsoft allows class action around sexual harassment. Why not go that far if there's an argument to be made that in getting these things out into the open more quickly, you address more systemic problems? Well,
I'm certainly proud of Uber's leadership position on this issue, and I have to applaud Airbnb and Facebook and Google for following suit here. And we think that the fact that the bar is being raised for everybody is a really good thing. I mean, it's a great thing, right, when you have companies competing with one another to raise the bar on an issue like this. When we took the step to announce the end of mandatory arbitration for individual claims of sexual assault, sexual harassment, we did so with safety primarily in mind, and that's really what drove that decision. I did say at the time, though, that this is a first step. It doesn't mean it is the only step, and so these are active conversations that we continue to have.
So you're considering the discrimination provision?
Definitely that is one of many things that we are actually considering. I should say that, there's nothing wrong with arbitration. Arbitration is an appropriate tool that is used by businesses every day in a very appropriate way. What we determined is that its use when it came to sexual assault and sexual harassment was inappropriate because it stripped agency and control from the survivor, even more, even continuing to do, unfortunately, what the original act can do in terms of stripping away that control. And so it's not really an appropriate tool there. You want to give the survivor choice. And I think as we look at whether or not arbitration is an appropriate tool for other types of claims, I think that's the kind of frame that we will approach it with.
Now, you now have an anonymous tip line for employees, and managing that has been challenging.
Yes.
Some of your top executives, former HR head, your COO, have been in the crosshairs. Another executive resigned over some of the allegations that came across this line. How do you balance corrective punishment and outright termination when people want to see consequences?
Well, certainly I can't speak, obviously, about any particular personnel decision, but I can say this. It's important when you have a system of reporting and a system of consequences in any workplace that there be a progression of responses that you can bring to bear, because what you're ultimately trying to do is make the workplace safe, inclusive, welcoming for the people to be there so that they can bring their best talents to work every single day. And you want to be able to support people in that environment. And if you can create that environment by giving someone coaching, or by changing someone's assignment so they're not in the same environment, or doing whatever and sometimes you may have to terminate someone. That's an appropriate response in some situations. I think the main thing is that you have to telegraph that you are going to take those actions. You are going to hold people accountable for their behavior, and that's going to be true across the board. I have said many times, no one is indispensable to a company. Everybody has to be held accountable for their behavior.
You've reached a settlement on the hack with all 50 states, and yet there are still multiple open questions from your former employer into Greyball, the Foreign Corrupt Practices violations, data scraping, price discrimination, stealing trade secrets. Do you think that legal risks will factor significantly into Uber's IPO?
Well, certainly you always consider legal risks whenever you're looking at, whether you're going to go public or not. And I should say that I'm can't really talk much about whether or not we may go public. But I can say that, we just had a bond offering, and part of the risks that you put in a document like that include the legal risks that you face. I think one of the good things is that our legal risks are well known, as you've just recounted. So there's not a lot of secrecy there. The investors know, but I think investors also know that we've been methodical and successful in mitigating those legal risks. I think in less than 10 months, we've been able to not only announce a data breach, but then resolve it with all 50 states. I think that's got to be a record time from the time that you've announced a problem to the time that you've actually resolved it with 50 different regulators. And we're continuing to be very methodical about that.
So for some of these other legal concerns, can you say you've gotten the all clear from the DOJ?
I'm not in a position to say that. I'm still continuing to work hard to make sure we're responsive to the requests that we receive from all regulators. And we continue to work very methodically and carefully to make sure that we're mitigating risks across the company. I'm very confident, though, that there is nothing that certainly I'm aware of at this point that would be a hindrance, frankly, to the company going forward. We need to deal with these issues, no question. We need to put a lot of these issues behind us, but I don't see anything existential in terms of a threat to the company.
The SEC and the DOJ are now looking into Snap, according to Snap, for potentially not disclosing enough to investors about how much Instagram was harming their growth. Now, with your IPO, and your CEO has said, could happen, next year, and reports are that it could happen early next year. How do your priorities change as you prepare for public scrutiny, whenever it happens?
Well, look, yeah, I think the task for us is to recognize that even though we are a private company, we are a global brand. And that carries with it great responsibilities. It carries with it accountability. And frankly, if we begin to hold ourselves to the same standards that public companies hold themselves to, we'll find that we're towing that line just fine. I think the most important thing, too, is that, if the company goes public, when it goes public, I don't know. But what's most important is not the day it goes public. What's most important is the day after, and the day after that, and the months and the years after that. Execution is what's going to make this company continue to be a great company and a successful company, regardless of what any potential IPO date may or may not be.
Now, putting on your government hat experience,
yes.
I'm sure you're glad you're not Facebook today after this New York Times report. But now that you have experience in Silicon Valley, where do you think Democrats in the House should focus their energy when it comes to tech regulation?
I don't know. I'm probably not in a good position to give the House Democratic leadership advice. You know, I'll let others do that. But what I will say is that it is important to always balance the approach as a regulator between creating incentives for good behavior and inviting companies to do the right thing and holding companies accountable. That's a very careful balance, and sometimes, you know, you can go a little bit too far in one way or the other. So the real balance is not to, I think, overcorrect, but to make sure that you're holding people appropriately accountable, no question, but that you're also recognizing and incentivizing companies to do the right thing.
Earlier this week, your CEO, Dara Khosrowshahi, said that you need more information to make a decision about how to proceed with your relationship with the Saudi Public Investment Fund. This morning, the Treasury Department sanctioned 17 Saudi officials. Do you have enough information now to make that decision?
I think I'm going to stand on Dara's previous answer, which is, look, let's be really clear and unequivocal. The murder of Mr. Khashoggi was a human rights and a civil liberties horrific tragedy that should never have happened. And I think you can't mince words about that. That should just never happen. And I think that the fact that we took it so seriously is manifest in the fact that Dara was one of the first executives to pull out of the Saudi conference when the initial reports we were getting was incomplete information and in some cases not credible information. I think there is a process in place to try to see if we can get more facts, more information, and I think once we get those facts, once we get that information, we're going to do our best to respond appropriately as a company.
Uber sales are dramatically slowing. Revenue growth in the third quarter was half of what it was 6 months ago, and also you're back to $1 billion in losses in a quarter. Are you plateauing here, or is this short term? I
actually saw the results yesterday, and I said, you know, that's a healthy quarter for a company of our size and global scope. Look, the reality is that we are investing for future growth. When you look at what we're doing in freight, what we're doing in food, what we're doing with electric bikes and scooters, what we're doing in high potential markets like India and the Middle East, we are investing for future growth. We want to solidify our leadership position, both as a platform for mobility, but also in key markets. And I think that's what those results demonstrate.
All right. Uber's Chief Legal Officer, Tony West, thank you for coming in.
Thank you, Emily.
A week before your celebratory anniversary.
Thank you.
Really appreciate having you here.
Great to be with you. Thank you.
Coming up, Apple rebounding after its longest losing streak in more than 6 months. The recent rout erasing more than $100 billion from Apple's market value. That conversation is next. This is Bloomberg. Bitcoin has fallen to a one-year low. The largest cryptocurrency plunged 15% Thursday during U.S. trading hours to less than $5,600. In 11 months, Bitcoin has fallen by more than 2/3. Meantime, the bad news just keeps piling on for Apple. At least 4 of its key suppliers for iPhone components have now reduced revenue estimates for the current quarter. The latest was Swiss company AMS, which makes light sensors for smartphones. That's amped up concerns about weak demand for iPhones. Apple shares have hit the longest losing streak in more than 6 months. Joining us now to discuss, Loop Ventures co-founder Gene Munster. So, Gene, how alarming is this to you?
Surprisingly, it's not alarming, and I want to put into some context, some historical context, is that the supply chain, when there's early feedback, this is still early in the quarter, these tend not to be good indicators. And the reason is that Apple already gave their guidance on November 1st, so 2 weeks after we're hearing these supply chain cuts. It's not alarming because what we're hearing from these 4 suppliers that you mentioned, those comments are already reflected in Apple's guidance for the December quarter. So this should not be anything new. And my history on trying to figure out the supply chain data points is that this is clearly more of an art than a science. And one thing that's important to know is every year going into a cycle, Apple tells their suppliers they need to produce more than they actually will have orders for. And then every year they cut orders going into this period. So this is nothing new, Emily.
Shares have come back a bit, but in general, how confident are you that the latest lineup of iPhones has been a hit? Or is that not the question to be asking anymore as they transition to a services company?
I'm in the camp that that's the right question to ask is, can they grow the base of iPhones in the low single digits? And I think that they're still on track to do that. I suspect that over the next 12 months, they'll probably increase the base by about 3%. It's not about a big hit iPhone. It's about maintaining the base and finding ways to grow from that. One way they can grow from that is by increasing ASPs, which we've seen over the past year, and that will continue over the next year. Another way is by selling services. And so I think that that's the broader, bigger question. And I suspect that the street is slowly, it will take a year plus, adopt this view that the overall Apple business operates like a service. The hardware included has some predictability that historically hardware companies did not have, but Apple's iPhone business over the years will start to yield a more predictable trajectory.
So looking at the stock chart here, you can see the slide since, around when the new iPhones were unveiled. We know this is a company that has been dependent on iPhone sales. Going forward, do you see a point when services revenue is equal to iPhone revenue?
Probably a long time away. It's 15% of revenue right now. In 4 years, we expect it to be 20%. That compares to the iPhone going from, call it, 65% of revenue down to 60. So there's still going to be a big gap there, Emily. I think ultimately is, though, this idea, the real emphasis here is this, is that just to conceptualize that the hardware business is operating like a software services type of a business. And I think that's the real inflection opportunity around the stock. And I think that that can pave the way that this is, we're going to look back, and this is be considered a buying window for long-term investors.
They're now well off that $1 trillion market cap milestone that they recently passed. Do you think investors aren't getting it?
I don't think investors are getting it. I think that this concern and anxiety about the health of the iPhone franchise is misplaced. I understand that there are 3 factors that played into it. One is the overall market. Second is Apple giving less disclosures about the iPhone units or no longer giving disclosure on iPhone units. And I think the third is what we're hearing in the supply chain. But I think this has caused the street to fundamentally miss the story. And again, I believe that the iPhone franchise is intact. I think that the chatter from the channel is essentially already priced into Apple's December expectations. And the other piece that I think investors don't get is that this story, trading at, call it 13 times, trades below Clorox or Coca-Cola, which is closer to 20, 22 times. And I think that at a minimum, it should be on par with those 2 type of consumer staple companies, because in fact, that's what Apple has become, as a consumer staples company.
What about globally? We know in India, for example, that Apple has sort of failed to break into that market in any significant way. In China, there's concern about these trade tensions, and the iPhone is just so much more expensive than many other phones out there now that we're talking $50 phones. Are you concerned that Apple won't be able to keep up with the global competition, or is the iPhone always going to be the most sort of desirable and aspirational phone out there?
I think that Apple's going to continue to be that leading edge. I think that, call it 20% of the population is going to want to pay up for a better experience. As you said, a lot of people can't afford this. India and China are two different stories. On the China story, I still am confident that despite the availability of, as you talked about, $50 alternatives, a much different competitive environment than really any other market that Apple competes in. Despite that more difficult competitive environment, I think just the sheer size of the opportunity in China still renders this an incremental positive for the Apple story in the years to come. There's just a lot of people people who do make a lot of money in China who can afford these more expensive iPhones. India is a different story. This has been needling at Apple for a long time, and I still don't see the path where Apple is going to get meaningful traction in India. They just simply don't have the brand in India that they have in the rest of the world.
All right, Gene Munster, Loop Ventures, always great to have your thoughts here on the program. Thank you so much for stopping by. Still ahead, Elon Musk wants to provide global internet coverage from space, and his company SpaceX just crossed a major regulatory hurdle needed to do so. We will discuss next. This is Bloomberg. Elon Musk's SpaceX has won permission to deploy more than 7,000 satellites from U.S. regulators, who also moved to reduce a growing risk from space debris as skies get more crowded. That is far more than all operating spacecraft currently aloft. The satellites are expected to provide broadband services to residential, commercial, and government customers in the United States next year. Sticking with Musk, the Tesla CEO announced on Twitter Thursday that the company has bought trucking companies to deliver Model 3s in the U.S. by December 31st. This if they're ordered by November 30th. He wasn't specific about which companies were acquired. Hedge funds dumped video game maker Electronic Arts in the third quarter. At least 9 funds exiting their stakes in EA. That is more than any other tech stock that wasn't an acquisition target. The launch of the company's Battlefield 5 game was delayed until after new releases from some of its key rivals. And big backlash to Amazon's decision to put one of its new headquarters in New York City. Some members of the city council want to know how the deal got done and whether it will really benefit the city. Amazon is promising to create 25,000 jobs in New York, but critics warn the project will raise housing prices and displace local residents. And that does it for this edition of Bloomberg Technology. Bloomberg Tech is live streaming on Twitter. You can check us out at Technology. And be sure to follow our global breaking news network TikTok on Twitter. This is Bloomberg.